So, US inflation numbers last week came in lower than expected, causing the stock market to basically shoot up. Dow Jones hit 40,000 for the first time, all-time highs. We had also Nasdaq, S&P 500, as we're seeing it today, move up higher. Russell 2000 still lagging behind, but also getting somewhat of a bid there. But all on this idea that, hey, inflation's coming down lower, things are getting better, stocks are happy, bonds are happy, Bitcoin's happy, gold's happy, except for AMC and GME, which have basically dropped quite a bit after its massive pump. But that's not the important thing here. The important thing here is that inflation came in weaker, so that must mean that rate cuts might be coming in sooner than anticipated. And to forget maybe one rate cut, we might be talking about now two rate cuts that might be coming in. This flip-flop, that's been happening since the start of this year, where the markets were anticipating 6 rate cuts this year, then dropping it down to, okay, fine, 3 rate cuts, and that we're going to get a rate cut in March, we're going to get a rate cut in May, and then June, and then, okay, maybe September. Oh, no, not September. Okay, fine, December. Then we're going to get a rate cut then. But we won't know, and no one will know, and not even the Federal Reserve knows that when this rate cut will come, where inflation will go, and it'll all be data dependent. Depends on what inflation comes out as, depends on how the growth data comes out to be, the jobs numbers, and so on. But there's another theme happening here, that as inflation is somewhat sticky, somewhat, some reports better than others. This is just one report. We have many more reports coming out. There's another theme happening here. It's that growth is weakening. The economy is starting to show in its data, although you may feel it in real life, but I'm talking about data coming out from the BLS, from what the government agencies are reporting. They're starting to show the weakness in its actual data. And to talk about a very big retailer, Walmart, is also seeing the signs and warning many times and many things to watch out for. Now, what's Walmart talking about? Well, there's this nice article here, comes out a couple days back. I'll link it in the description for you to read up on it. It's titled, "Affluent Consumers Are Creating a Bubble at Walmart, Warns Retailers." Former US CEO Bill Simon, right? A bubble. Shouldn't that be good? Shouldn't more affluent, consumers coming in, creating bubbles in Walmart be good for their earnings? Well, let's read up here and see what they have to say. The article here comes out again from CNBC. Higher income consumers may be creating a frothy situation at Walmart. Even though affluent shoppers helped drive the retailer's latest beat on quarterly results, the earnings report that it had recently, basically saying majority of that beat came from these rich shoppers. Former Walmart US CEO Bill Simon warns they'll be hard to keep. So although they're here for now, they'll be hard to keep. They'll later on move on. The Walmart experience is better than it used to be, but it's not a premium experience unless Walmart decides to change. Wouldn't that be funny or interesting that Walmart starts offering a exclusive membership for the rich? Hey, you subscribe here and you'll get an amazing experience. But that may not be true. That may not come true because Walmart is built on convenience, cost, assortment, not on service, he told CNBC Fast Money on Thursday. As the economic challenges abate, service will become more important than convenience and price. And we will see a shift back to some of the consumers. That's the bubble that he's talking about. So it's basically saying that right now we're seeing rich people start to feel the pain of all these higher rates. Of course you would be, right? If you've got a lot of investments and loans coming up and you own businesses, you're seeing consumers drop off in terms of their spending habits, and they're not spending like they used to because they're feeling the pain. The amount of credit, the interest, the loans, the high interest rates, right? Mortgage payments and so on. And let's not forget many, many, many renewals, mortgage renewals, especially in the commercial real estate market, are coming due. We're talking about trillions coming due end of this year and next year altogether, which can bring a lot of pain for that market and could also definitely transition into job losses and into the economy as well. So, although the CEO says that they're seeing these affluent people come in, starting to shop at Walmart, you might be seeing it in your Walmart as well. The Porsches, the luxury cars, the German cars showing up more at Walmart or those cheap retailers because they're feeling the pain, right? Especially if they're heavily invested in real estate, it's hurting their pocket. So they got to dial down. So it's not just the low income people who are going to be hurt from this, it's the rich as well. So his warnings come with Walmart stock hitting all-time highs going back to August 1972 when it began trading. In the New York Stock Exchange, shares almost surged 7% Thursday after discount retailers' first quarterly adjusted earnings and revenue beats estimates. Walmart reported high-income consumers helped drive profits, particularly in its grocery business. Food. Because of course, the rich don't have time to make food. They'll go out to the restaurants and spend there. But hey, the restaurants have increased their prices. It's expensive dining out. So what do? You go to Walmart or these cheap retailers, like they just announced here. The challenge is that the tailwinds that have come from food inflation that have pushed Walmart along will reverse eventually. Basically saying to you that, hey, in bad times, we do really, really well. And when things get back to normal and things, do well, then we're going to see all that money that was coming in from the rich go away and we might not do as good as we are right now. So basically giving you another signal that Walmart does well during bad times, during hard times, because a lot of consumers out there decide that they need to shift their spending habits, as you're seeing right now. Now, Simon contends higher income consumers going to Walmart isn't good news for the broader economy. Like I just explained, when money is tight, people react. Even high-end consumers react, he said. Despite his bubble warnings, Simon thinks Walmart is a great investment over the next 12 months. Well, will it be? If the next 12 months we end up seeing a massive crash or a black swan event that causes the stock market to plunge, yes, even Walmart, its stock price will also plunge. Same thing with McDonald's. All these stocks that you may think are recession-proof, everything will come down, especially if there's panic. So will it be a good investment? We'll see in 12 months down the road, 24 months down the road, but maybe longer term, it may be, but for now, there are definitely a lot of headwinds and a lot of risks ahead. And this here, just to prove to you that with the earnings from Walmart telling you that you have these affluent consumers coming in, spending more, especially on the grocery items, are there telling you that they're cutting back on their spending. And we're starting to see the economic growth data, like I mentioned in the beginning, the weakness, and it's in some of the reports from the BLS. The year is still not over yet, and the renewals for the mortgages from the commercial real estate side is yet to come, and much more is yet to come. So until then, we might see this trend continue or maybe subside and then come back bigger and stronger, depending on how bad this recession ends up being. Now, what's going to be interesting is we also have Target reporting this week. We have Lowe's reporting. A couple of realtors, TJX as well. So it'll be interesting to see what they have to say, how they feel about the consumer sentiment, their spending, their earnings, and so on. especially after what we've just heard from Walmart. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers, bye.